Good afternoon, Patriots, and welcome to the 202nd audio chat on the Q News Patriot Rumble Channel series. I am the Q News Patriot, joined again today by metals analyst and Patriot financial expert Dr. Kirk Elliott from KEPM. My name is SG Anon. Patriots, we've got a really incredible discussion, I think, teed up for you today as the entire world is looking on with trepidation, confusion, and in some cases, some reckless abandon at the events that are transpiring right now, not just in the Middle East, but all of the way to East Asia, in Europe, and right here at home in the Western Hemisphere. From Iran to Mexico to Tokyo to London and New York City, the entirety of the old world finance and commerce system is taking a veritable beating right now, both literally and figuratively. Dr. Kirk has had his eyes and ears close to the ground on world markets for a while, but especially since the silver rally that happened earlier this year and the subsequent war that just broke out a couple of weeks ago. And I'm very excited to share his perspective and his vantage point again with all of you. As a quick reminder, he's one of our proud partners here at Q News Patriot, and my family and I use his advice and guidance personally to navigate our own decision-making process as well. Dr. Kirk, I have to say thank you very much for joining me again to break down some incredible events. How are things going?
It is going so great. Other than sleep, right? There's not enough time to get sleep right now. But you know what? I'm so encouraged, SG, because we've done a lot of shows together, and this is what I've done since 2002, right? I have never seen ever, literally ever, this kind of activity in the markets, which tells me that this isn't just hedge funds, this isn't just banks, this isn't just COMEX and LBMA in London doing things. The retail public is waking up. So the busiest I've ever seen it prior to now was when Silicon Valley Bank failed. And that was extremely busy. Now we're probably 2 times that activity level.
Holy
And here's
cow.
what's encouraging. 99% plus of all of the hundreds of calls that we're getting every day are purchases, not liquidations. So what does that tell us? That our viewers are really in tune with what's going on in the world, and they're using some of these dips that we see as buying opportunities, not as the end of the world gloom and doom. Gold and silver have peaked out. We're locking in our profits and getting out. Nobody's doing that. Right? Everybody is buying, which tells us that there is a lot of upward momentum still in this market, right? And when you see this volatility in these violent price swings that we see from time to time, for example, January 30th, right? That was a big day. Silver had grown to $118 an ounce from 71 on the first day of the year. Literally went from 71 to 118 in a month. Silver was up 67% in January. So what happens to some of these big banks that own short positions on silver, that have been manipulating the market for their own gain? They lose money hand over fist because they were on the wrong side of the transaction, right? They didn't see or foresee, I should say, London running out of metals, COMEX running out of metals, the massive amount of demand that we're going to see in a world where the silver supply is static as far as mining production, but it's diminishing because of there's more purchases than there is actually manufacturing. And ultimately you start to run out. This is what we're seeing. To me, supply and demand always rules the roost. Right? This is why things go up. If you've got low supply and high demand, the price will go up. The price with anything would go up under that circumstance. So when you see these violent price swings, it was simply this. The big banks, one of them would have probably gone under if silver kept going up, because it's not just a negative position for them, it's leveraged negative position. These contracts are leveraged contracts. So it's not just a dollar for dollar loss. So they issued naked shorts. Then they caused the price to come down. They started unwinding these positions as the price came down and getting out of them. Well, see, fundamentally, I love that, because Kirk, how can you say that you love it when silver went from 118 down to 65? right? I mean, it was a big correction in the matter of 3 days. And then what did it do? It bounced right back up. It didn't stay. Normally, if you have a correction, SG, it plateaus for a while. It consolidates. And we didn't see that. It bounced right back up, went up to 92. Now we're at 81, right? So that's a lot of volatility. But what that tells me is during this time frame, there was a lot of naked shorts that were unwound. See, when you get rid of that, and these banks did it to save their own skin, I don't buy the story that, oh, they're just manipulating markets. It's like no manipulation here. They're just unwinding to get out, or else they would have gone bankrupt, right? And so in any bull market, you'll have 2 steps forward, 1 step back, 2 steps forward, 1 step back. This is healthy for a market. When we pulled back, not only did you fix an extremely overbought situation technically, B, you got a lot of these naked shorts positions unwound. Now, let me explain the difference between a good short and a bad short. There's a difference, right? So if you own an asset, let's say you're a farmer and you're producing corn and you're selling corn 3 months from now to Kellogg's to make cornflakes. What are you going to do? You're going to put a short position, put option on that to make sure it protects you against a downward price move. So if the price goes down and you're forward selling it to Kellogg's, you're not going to get hurt. See, that's normal business operation. That's just a hedge against something that you produced or you own. Now, what's dangerous is what these banks are doing. A naked short is putting a short position on something, not to protect something that you own, but to manipulate the markets and leverage something that you don't even own, right? That's a naked short. So when it goes in the wrong direction, it's not only do they not have the asset, they truly just don't have the asset. They lose money in leveraged amounts. And so they had to do this to stay afloat. But what I look at is it's estimated that JP Morgan got rid of 50% of their naked shorts in that 3-day span, and another 10% of other companies got rid of it. So more than half of the shorts outstanding were wiped out in a few-day span.
Amazing.
That is so healthy because a short acts as an anchor to future growth. We just got rid of more than 50% of it and realized that some shorts are actually good. We're never going to get rid of them. So the vast majority of these dangerous short positions, in my opinion, have been extinguished, which is going to have a much freer flowing market moving forward. So as you look at a chart, right, which is everyone's looking at the price of silver and the price of gold on a chart, it's like, man, it's going up a lot. There's always a fundamental reason that causes the chart to look like a chart. The chart isn't just there, right? It's like what causes it to grow, what causes it to shrink. It's always a legislative action, an executive order, geopolitical conflict, normal supply and demand issues. There's always something that causes a move to make a chart look like a chart, right? And these are the things that you and I have talked about off air. There's some big things happening right now that are, make sure you keep listening till the end of the show, very bullish. I'm just going to put it out there, very bullish for gold and silver. Like, well, what are they? Right. So to me right now, as we record this, I think the biggest thing is the Iran war. It's like, why would that have anything to do with silver? They're not producers of silver, right? No, but they produce oil. What did they do? They shut down the Strait of Hormuz. It looks like a DMZ right now, right? So they shut that down. There's no oil going to the rest of the world. Oil is already pushing $100 a barrel. It is up a lot since this conflict started. So what if oil gets to 150, right? It started in the up 60s, 70 frame, area. Well, if it gets to 150, it's more than double. What on earth is used more than oil? I can't think of anything. It's used in everything. From making this shirt, right? It's the grease in the gears on the loom that makes cotton pants, right? It's like the rubber plastics. just actual fuel. Literally almost everything uses oil. I would be hard pressed to say that's not the most important commodity on earth. What's the second most important commodity on earth? Silver, right? Because it's used in solar, it's used in all electronics, it's used in AI chips, right? It's used in cryptocurrency mining, nuclear power, the military industrial complex. It's literally used in everything in the new economy moving forward, right? So it's like, wow, both of these are being impacted right now by wars. So with oil going up, that's going to cause global inflation because it's used in everything. How do you slow down inflation? You raise interest rates. What does Trump want to do to stimulate the economy? Lower interest rates, right? So he's been having this battle with Jerome Powell for a long time, right? For like 2 years, Jerome Powell, you know, the chairman of the Fed, who's replaced by Kevin Warsh. What was the battle? He wanted to raise interest rates to slow down inflation. Trump wanted to lower interest rates to stimulate the economy, right? Both of them solid policy options depending on how you look at it. So to stimulate the economy, Trump can't have raising of interest rates. But wait a second. You have to use raising interest rates to slow down inflation. The cost of oil potentially going up to 150 a barrel is going to cause inflation. You know who knows this? Iran knows it. China knows it. Neither one of those countries are very keen on Trump getting the presidency again, right? So I can tell you that much. So what do? How do you impact Trump's domestic economy in an election year? You cause massive amounts of inflation. So he can't do what he wants to do with lowering interest rates to stimulate the economy, right? So to me, all of this smells funny. It's just, but I don't care how it smells. I don't care how it looks. All I care about is the implications of it, because once we understand the trends and these implications, we can allocate properly to grow our portfolios, right? The second thing, also war related, but a different war, is the cartel war that's going on in Mexico, right? Everyone thinks, oh man, we've got to stop the drug trade and the human trafficking and everything coming across the border, right? And this is all absolutely 1,000% true. But what else comes across the border? Silver. Mexico is the producer of the ore of 50%, 50% of all the silver going into the refineries in America comes from Mexico. Then once it gets to the refineries, they make it into coins or bars, right? So it's 50%. What's happening in Mexico? 2 weeks ago, there was a story posted about how the cartel, what is the cartel? It's organized crime. What do organized crime, mafia, gang bosses look at? Anything that they can smuggle, anything that's good they can get a profit from. So they're seeing these silver trucks driving through Mexico to get across the border to the United States to deliver millions of dollars of silver per truck to the refineries. What are they doing? They're kidnapping the drivers. 2 weeks ago, they killed 10 of them in a weekend, put them in a shallow grave. So now the mining operators in Mexico are having a really hard time finding workers in that environment. I mean, duh. So now we've got this massive supply chain disruption of silver coming into America. Where else do you have a supply chain disruption? China. China is the largest refiner country in the world of silver. Where do they get most of their silver from? Not from themselves. They get it from South America, most of it. Well, what happened when the United States attacked Venezuela? The waterways outside of Venezuela were basically shut down. So Chad in Africa, the country Chad, is the largest producer of silver in Africa. They couldn't get silver into the North American refinery system. Peru is the largest supplier of silver in South America. They couldn't get through those waterways either. So not only is it not coming to the United States, it's not going the other direction to China either. So China has very little supply. The United States has very little supply of silver. This is why China, a couple months ago, said, we're we're not exporting silver to the rest of the world anymore. It's like, why would an exporting country not want to export something? Because they need it, right? So they're not getting supply. That's a problem. So they say we're not going to export anymore because everything that we get, we need to keep for manufacturing. Who was the largest supplier of silver to LBMA in London? China. So now London gets no silver. They can't fulfill their contracts, SG. So when you look at the
Incredible.
geopolitical dynamics that are happening right now, it is wild. It's like you could make a movie out of this stuff and it would be an exciting movie, not a boring one, right? It's like this is incredible to me, but all of this noise is not just noise because once you decipher it, what is it? It's simple. Low to no supply, high demand, that always causes prices to go up. Don't pay attention to the day-to-day fluctuations, to the manipulation that you see when you have a very volatile day and banks unwinding short positions. That's all temporary. What's not temporary is the future outcome of where silver and both gold are going because there's low supply, there's high demand, the world is changing. We're moving away from fiat-based money to tangible asset-based money because it's real, it's authentic. And this is what the populists on the left and the right are all calling for, right? So to me, this is a paradigm shifting moment right underneath our nose, right? And so Ray Dalio has talked about this, brilliant billionaire hedge fund manager. Whether people agree or disagree with his politics, I don't care. He's a brilliant hedge fund manager. And he says this is a paradigm shifting moment that we're seeing because of some elemental forces. Number one, the debt spiral is unwinding. Like you and me as individuals, if we spend more than what we make year after year, we're ultimately going to have to file for bankruptcy. Same thing with countries, unless you have a reserve currency like the United States. Oh, that's changing too. Point number two is the international order, economic order, is changing. So what started in 1945 under Bretton Woods was the US dollar as the world's reserve currency. Then we went to the petrodollar. It was this multipolar world ruled by the US dollar. Well, now what are we? We're getting rid of the US dollar globally. Country after country after country is dumping it. And it's turning into a unipolar world of a one world government, one world currency, digital money, central bank digital currency, right? This is where we're headed. So that's a fundamental shift. You've also got wars and rumors of wars, these geopolitical conflicts that cause people to change their investing habits. You've got natural disasters, famines, floods, all this stuff that happen. And one of the biggest drivers moving forward is technology. See, technology is a very disruptive force in the sense of companies love AI because it can enhance their productivity. They don't have to hire people when you can hire a computer that doesn't cost anything, right? But then what? You lose jobs. When you lose jobs, you lose federal tax revenue, you lose sales tax revenue. And with technology increasing, you also have the ugly result of surveillance society like nothing we've ever seen. And the massive increase of satellites in space over the next 6 years projected, it's why do they need that many satellites in space? Because we're moving towards a surveillance society, right? So technology is a huge disruptor. And this is going, what do you need for technology? You need silver. What do people need for technology? Well, A, they don't want surveillance society. B, they don't want AI to replace their jobs, but this is the way that we're headed globally. So Dalio talks about that. Well, there's one other big element that you and I have talked about. And so this is an old story becoming new again, which is, do you remember, SG, when we talked about that book, The Great Taking?
Indeed.
Was that like maybe 9 months ago, a year ago? I can't remember, but it was something like that, right? So what was that conversation about? That conversation was about these big international money center banks, brokerage institutions. When you deposit money in there, basically the great taking says you give up the right to your money. Like when you deposit money into a bank, let's say you deposited $100,000 and you've got all these hundreds that are going into the bank vault, right? And you would assume, like on an old-fashioned movie, you open up the big steel bank vault door and all these hundreds just come flying out, right? It's so full of the hundreds. No, you securitize it in the contract of your checking account that says, hey, bank, all this money I'm depositing, I'm giving you the right to do whatever you want. All I ask for in return is that when I need it, you give it to me plus interest. That's what the securitization of your money does. Well, how do they do that? They give out about 90% to somebody else and they keep about 10% on hand to cover withdrawals. Well, then, so on $1,000, you've actually got 100 that the bank keeps, 900 is lent to client B. Then client B, same thing, $900. So that means 90 is what they keep. 810 is what's lent out to the next guy. So then client C, and this goes on and on and on. You can see if you've got 10 clients, there's almost nothing in the bank, right? They've all lent it out. This is
Client 11 and above just is out of luck.
You're basically out of luck with 11 clients in a bank, right? So BlackRock just proved that the Great Taking wasn't just a book of dystopian future. It's reality, right? So here's where this is so interesting, because what did BlackRock do? Central bankers and their trillion-dollar asset managers have engineered a system where they can seize your money at will. That's what the Great Taking is all about. So BlackRock, the world's largest financial manager, just locked up investors' funds in its $26 billion private credit fund, $1.2 billion in redemption requests this quarter alone. So what did they say? Simple. No, you can't have your money. And then they said, we're capping it at 5% of what you have, which means they're keeping 95%. So they blocked the rest. Then you look at, what about all these people that want their money? They're trapped, right? That's the Great Taking. Then you've got Blue Owl, another, fintech firm. They stopped honoring redemptions outright, completely. You look at Blackstone, one of the largest real estate funds on the planet. They saw a record 7.9% redemption surge this quarter alone, right? And so what did they do? They hid the problem. They dumped $400 million of their own capital into it. Okay, the problem. Because they didn't fix the problem, they masked the problem. This, to me, shows that the Great Taking wasn't just a book. It was almost like a
prediction,
a prophetic monologue, right? Of what's going to happen in a paper world where you give up the rights to your money to some institution that's going to use it for their own gain. So how do you protect yourself from that system? You invest into tangible assets that have no counterparty risk. You don't turn it into paper. You own it, right? You own the physical gold and silver, not tied to the financial institution that way. Even if you're storing it at a depository, you are still the owner. You're just storing it someplace else rather than in your home. And they don't have a right or a claim to it. It's like you're paying them rent for safe storage. I would use an example of, like, let's say you have a bunch of boxes and couches and junk and all this stuff that you put in a public storage unit, right? Do they own that? No, you own it. You're just paying them rent for safe storage. Contractually, that's how the depository that we use works as well. They don't have a right to a claim to it. They're just storing it for you, right? So that's how you eliminate these horror stories of the Great Taking, when the financial institutions, as Catherine Austin Fitts wrote, right? This was her research that I just went over with BlackRock and Blue Owl and Blackstone. How do you protect yourself from that? Own physical assets. What makes them safe? They're going up because of everything else we talked about, the war and the supply and demand discrepancies and everything. There's a time and place for everything. And this is where we are right now.
It's absolutely amazing, Dr. Kirk, I have to say. And as you were going along there, sort of setting us up for the broader discussion here, it occurred to me that as you described all the different changes happening in the silver markets, in the worldwide energy markets, the hemispheric changes as far as routes, as far as being able to get things from point A to point B, both over land and over sea, it occurred to me that it's almost as though you were describing the very roadmap by which one would transform a financial ecosystem worldwide. Is that a fair characterization of what you see happening right now? In other words, are we living through a transformative event that's now going more and more public?
Yeah, I think that we are. I think this is kind of the paradigm shifting moment that we've talked about for years. Literally, I think we've talked about this for years of what happens in a world where the central bankers don't control things anymore. It's crypto, decentralized finance, the distributed ledger blockchain has basically made banking available for private citizens. It's gotten it away from central bank digital currency into decentralized finance. That was the disruptive force that is causing a lot of this. And we're seeing it play out. Well, what do you need for that disruptive force? You actually need silver for the AI chips and for the cryptocurrency mining and all of this stuff, right? So I think in a populist world, both on the left and the right, and people are screaming for change. Sometimes they're just screaming for change and they don't know what change they want. I've seen some of the parades out here in downtown Denver. It's like, what? I don't even think those people could fog up a mirror, right? There's just not a lot going on upstairs, but yet they're protesting something and they don't even know what they're protesting. How do I know? Because I've had conversations with them. It's like, what are you doing? Oh, we're just part of a bigger story. It's like, what's the story?
Cannot compute.
We don't like ice. Why don't you like ice? Well, I did because you shouldn't. It's like, okay, what's a stupid answer? It's like they don't know what they're doing. They really don't know what they're doing. And so we've got this stuff going on right now. It's a societal shift. It's a religious ideology shift. It's a political shift. It's a political worldview. We've got all this transition happening right now. You know what doesn't like transition like that? Traditional equity and debt markets like stocks and bonds. They hate it. They like consistency of future expectations. When you have change like that, where there's an uncertain outcome down the road, gold and silver thrive on that as a flight for safety. I mean, so, and I keep going back to the financial aspect of some of these things because I'm an economist. It's what I do, right? But I want to put a smile on people's face, letting them know there is something you can do, even though it seems like the foundations around us are eroding. There is something that you can do to protect, to preserve, to grow, to thrive, to take advantage of these situations so they don't take advantage of you.
Very well said. And so that leads me to my next question then, dealing with situations. We know that the Iranian war, the Middle East situation right now, it's not likely to conclude in our immediate term. We're talking about days or a couple of weeks. But we do have the White House having come out and said that the timetable, it is a limited timetable. It's not an endless adventurism style situation. And as you pointed out earlier, we've got this pressure that's been built inside of energy markets as a result of that. What does that pressure do on other markets like silver, like gold, precious metal space in general, platinum, copper, cobalt? What happens to those markets when the pressure is created inside of these old infrastructural situations and that pressure is no longer sustainable?
It the longer that this goes on, the more gold and silver go up because it's more turbulence, it's more change. Right. I'm sure many have thought this is just going to be a quick 2 or 3 day excursion, in and out, done. But it's proven to be longer than that. But what's it going to be? 2 or 3 weeks? Is it going to be 2 or 3 months? Is it going to be multiple years like Afghanistan, Vietnam 2.0? We don't know. Right? We hope and pray that this is quick because war is not good. It's expensive. People die. Lives are changed forever. Right? But if this does prolong, the longer it goes, the more damage this does to the stock market, the more benefit this has for gold and silver.
Absolutely incredible. And really the reason I keep saying incredible is because we've talked about this for a couple of years now, and we've sort of talked about it from an esoteric point of view and a philosophical point of view. And there's been some punctuation marks in the physical world and in the kinetic world where things are transforming and changing over. But now we're seeing massive redefinition. We're talking about changes in shipping routes. We're talking about changes in land routes and trade routes. We're
Yeah.
talking about government clampdowns on exports and imports. I recently saw that China is now restricting all exportation of fossil fuel derivatives to include diesel. In other words, they're keeping all of their fossil fuels in-house. And what that does to Europe, I think, could be a whole podcast in and of itself. So let
Yeah.
me ask then, with respect to this, as we look forward and we try to prognosticate a little bit, are we not seeing havoc, being wreaked inside of worldwide U.S. Treasury markets? And does that eventually drive us to a point where we have to revalue the dollar using some sort of backed asset?
Yeah, I think so. I mean, so what is Trump doing with the Genius Act and Clarity Act, things like that, right? Where issuance of stablecoin that creates demand for the US dollar on the blockchain. That's demand that wasn't there before. Why do you need to do that? Because traditional demand for the US dollar in the global banking system is gone, right? China is dumping it. The BRICS nations are dumping the US dollar. Japan has to get rid of their dollar positions because the yen carry trade is over. I mean, this is ugly for the US dollar moving forward as aggregate demand continues to erode. But what doesn't continue to erode? Our deficit spending, our national debt, right? You need foreign capital coming in to pay some of these things off. And when fewer countries are actually wanting the dollar by design, probably, right? Not our design, the rest of the world's design, because they want a new top dog in the global economic order. They don't want it to be American, right? So ultimately, policymakers are going to have to decide what to do. Generally speaking, 99% of the time, you raise interest rates to slow down inflation as you print money to get yourself out of the pickle. Because normally, if you have enough capital inflow coming in, countries investing in your treasuries, you don't have to print money. We haven't had that for since the beginning of time because we spend more than what we make because we have a printing press and the world's reserve currency. As that goes away, because the global order is changing, we're going to be left to our own devices. And there's going to be a propensity to not raise taxes too much because we're already tapped out. So what's the other way to make money? Print it, which is going to cause even more inflation. So I would expect an era moving forward because of the lack of demand for the dollar of a new normal in interest rates, right? We've gotten so used to 0 to 3%, but historically the norm is in the 7% range. Imagine a world where normalized interest rates are 7 to 10%. That would put your mortgage at above 10%. This is just the world that we're moving into as countries are going to have to not rely on free money from Japan and the yen carry trade to finance stimulus. They're going to have to rely on their own devices. This is going to be the way that the world has to operate moving forward, which means some countries go bankrupt. Some countries try to print their way out of it. Some countries just erode time over time, and the outcome is uncertain, right? But what we do know that's more certain is how gold and silver in those environments is really good, SG, really good. And our goal is to minimize risk and maximize return in an era where you can't change an awful lot. You can certainly change your own personal finances. You just have to act right, act with wisdom, act with discernment, act with courage, sometimes go against the grain and do something that my advisor has told me that gold and silver are stupid and it's a risky commodity. And why would I ever do it? It's like, okay, silver was $18 4 years ago. It's now 81. Has your investment advisor done better than that? No, I know they haven't because silver's the number one performing asset in the world during that time. It's when you look at safety and growth, normally if you want high growth, you have to settle for high risk. And if you want low risk, you settle for low growth. With silver, because of the supply and demand issue, it's needed for everything, pretty much. There's the safety because it's needed. So you've got low risk and high return. You can't ask for anything more, in my opinion.
I think that's very well said, and I think all of the economically minded patriots out there watching this broadcast will relate very closely with that. That leads me to my final question here, Dr. Kirk. It gets nebulous and amorphous to try to predict some of these things long term. We know that the commodity space in general, the tangible asset space in general, will almost certainly have to rise as we go through the rest of this particular decade, looking towards the year of 2030. But in the immediate term, we have a lot more indications and I think a lot better of an idea of where things might go. What are your thoughts about silver and precious metals in general for this particular year, looking towards the fall and Christmas time of 2026?
I mean, I think obviously I'm not God. I don't control the markets. I don't have a crystal ball, right? But I'm looking at the trends and the supply and demand discrepancies. I would be shocked if we didn't see silver at 150 by the summer and pushing 300 by the end of the year. You know who else thinks that? Bank of America. Bank of America. What are they doing predicting silver? It's like you're right, they're not a silver commodities trading entity, but they're looking at the macro flows as well. So their chief metals researcher at Bank of America predicts by the end of this year, silver will be 153 to 309. It's Bank of America. So that's a wide range, but you know what? Either one of them, considering we're at 81, not that bad. And this is one of the first times this has been happening actually more and more over the last quarter, but really one of the first times that a major international money center bank, one of the largest in the world, has actually agreed with my prediction. I was like, wow, this is like crazy to me. It's not some rogue internet, conservative podcaster, that's wanting clickbait that says silver's going to be over $300. You should buy it now. This is Bank of America. JP Morgan Chase is now recommending 20% of their clients' portfolios go into silver or go into gold. They're looking at precious metals, right? Numerous banks, Jeffrey Gundlach, the bond king, I mean, one of the greatest bond investors of all time, multi-billionaire, he's saying 25% of your position should now be into gold. These are a far cry from where we were a couple years ago when advisors would say, don't have any to, if you do it, if you want to put your foot in the water, buy gold or silver ETFs and no more than 5% of your portfolio. How quickly times change during an inflationary, war-torn world where we've got paradigm shifting moments and the old order is going away, a new order is coming. And even the old school investment houses are now saying buy physical assets. I mean, it's just crazy to me, but this is the paradigm that we're living in.
Truly historic times. Dr. Kirk, it's been a wildly informative talk yet again. We always have, I think, fantastic exchanges with one another. How can Patriots reach out and perhaps get involved, have their questions answered, and get some support as they try to navigate these waters?
So a couple of ways. You can just go to our website, kepm.com/SG. That way I know that they came from you because I want to know what they want to talk about. I want to know what you're interested in, right? Or you can just simply call us 720-605-3900 and then just say, SG sent me. But yeah, just call either one of those. There's a lot of people now that are impersonating me online, giving out some weird email, weird phone number. No, the phone number is simple. 720-605-3900. If it's not that, it's not me. If it's not kepm.com/SG, which goes to you, so I know who sent you, it's not me, right? So it has to be kepm.com. It's not kepm.us. It's not some weird email. I don't ever give out my personal email. I don't ever give out a personal phone number. It's not one of these two things. Not me. That's how you can reach us, though. And we will call you back. Literally, your timing is amazing. This is the busiest we've ever been with purchases because America is waking up. This is what's encouraging to me. They're not falling asleep. There's hope in all of this, and I can see it by volume. America is waking up, and that's a good thing.
What incredible and amazing times we're living in. Dr. Kirk, thank you very much for joining us again on the show. For the audience out there, if you'd like to learn a little bit more, you can reach out through kepm.com/SG or give them a call and have your questions answered. This is SG and On. I'll be back with each and every one of you again soon on the Q News Patriot Rumble. God bless everyone. Have a spectacular day today, and thanks. Bye-bye.